Good. Well, welcome back, ladies and gentlemen. I hope you had a good little break with gotten your coffee or managed to get around and then have a chat with people here in Paris. We're very, very happy to have you all back. It's been a green morning. We're going to move into a very techie afternoon. Please don't be scared. I will hold your hand as we go through. But also, please do stick around because the French Finance Minister, Bruno Le Maire, will be here after this panel. But please do stay tuned for now because I have a wonderful debate here on big tech, fintech, and banks in the payment space, from competing to collaborating. And I have a wonderful group of panelists here. I'll first address the people who are then coming in online. From Brussels, we have the European Commission's Marcel Haag, who is the Deputy Director General for Horizontal Policies at the Commission's Department for Financial Services. And we have MasterCard's Jason Lane, Executive Vice President of Market Development. And thankfully, very much, I have someone in the room here. I have Karel, who is the Chief Executive of the Center for European Policy Studies. Everyone, please show your appreciation with a warm round of applause as I welcome Karel onto the stage. You feel good? Please do take it.
Thanks.
Thanks so much for being here. And thanks so much for the other two for being here as well. Before we start, I just would like to mention that we have a poll sponsored by MasterCard, which we encourage you all to get involved in here in Paris. Not in Brussels, in Paris, as well as online. The question is, what is the most important consumer benefit from moving towards a central bank digital currency, or European standards, a digital euro? Is it convenience? Is it security? Enhancing financial inclusion? Cost effectiveness? Or is there no consumer benefits at all? So please do get in to that poll, and we will address that at the end of the panel. I think actually we'll start straight with the Commission, and welcome Marcel. I think we just touched on central bank digital currencies there and the digital euro. The Commission is planning to come forward with a proposal early next year and a consultation next month, if not a little bit later only. I'm just curious, what are the kind of questions that you're going to be asking?
Well, let me first say that this is not the first public consultation that has been conducted. The ECB has already made a public consultation last year, which was very extensive and which produced rich evidence. Now, we intend to focus now our public consultation, which should be a complement to what the ECB has done. We don't see a need to replicate what the ECB is doing. More specifically, on the areas on which legislation will be necessary. So we will be focusing on things like data protection, anti-money laundering, and counter-terrorism financing. So AML, CFT will be covered. Things like that to complement the work that the ECB has already done.
I'm curious, I'm just going to stick with you, Marcel, just for a second. I mean, we talk about the digital euro. We also have to remember that there are people outside who might be tuning in, who might be not too familiar with the benefits of a digital euro, which we'll get to also in a second. But can you just give the audience an idea about what the impact on the financial industry a digital euro would have, and why is that such a concern?
Well, look, the digital euro would be public money. It would be issued by the ECB and it would be backed by the ECB. So it would be a risk-free. Money, unlike private money, where you still have a residual risk. So. What we need to make sure is, or the question that we have to ask is, Do we want to create a digital money digital public money that squeezes out other private forms of money, and do we want to what will be the role of private operators in an environment in which public money is readily available in a digital form for payments and maybe other use cases? And here, the ECB has been very clear by saying we do not want a CBDC, a digital euro, that squeezes out private sector solutions, but we want to offer a digital euro that is complementary and coexists with private sector solutions. And that is very much also the thinking in the Commission. So our objective will be to create an ecosystem in which private sector solutions and a digital euro can coexist and can both thrive.
I want to push you on one more thing before I come to Jason and then to you, Karel. I was just having a conversation with someone here in Paris yesterday over drinks, and I was trying to explain what the difference is between a digital euro and, like you pointed out, private money that banks provide us, because we all have, many of us have online banking. I mean, those are, digits on a screen. As far as I know, that's a digital form of cash. You mentioned private money. Could you just explain, maybe better than I did, could you just give people a sense as to what is the difference between what it is that you have on your banking app and how the digital euro is supposed to be any different?
Look, I mean, the look and feel might be very similar. I mean, that depends really on how the digital euro will be designed and implemented, and that is something that the ECB is working on. The way I look at it is that the digital euro would be an alternative solution that coexists with private sector offerings.
Okay, I know Karel's going to want to help us out on that one also in a little bit. But before I get there, Jason, the consultation will be coming in a month. You must be getting ready to write in your answers. Can you give us a little idea about what you want to contribute to this debate?
Yes, absolutely. So good to be with you all today. So obviously, what we like about what essentially the Commission is leading here around digital euro, obviously, is bringing certainty to stablecoin CBDCs. We do appreciate that. We also believe, that it will venture beyond sort of the importance of, consumer choice and ensure that there is, as Mr. Haag just said, a level playing field. And more importantly, that the traditional, banking system should be preserved, right? So if we look at comments just made by Mr. Haag, private money on banks essentially are private money in a respect, but they're also backed up by the ECB. Ultimately, if you're sort of Joe Smith walking down the street, you're looking for, security and transparency and ease, actually consumer ease, when you sort of engage with payments. So going back to sort of what you were saying, Bjarke, about explaining this, I mean, what we're excited about, again, is putting, the consumer first in terms of, allowing them to sort of understand how they access their funds. Because of course, a digital euro, as a form of a CBDC is just another way to access funds, right? And so we're a firm believer in sort of the regulatory certainty that will come in that. And obviously, again, it's just another choice of how a consumer, even businesses, will be able to make payments, right? And so sourcing, your savings account, to sourcing a line of credit, to sourcing a digital euro, this is the ease which we're ultimately hoping will allow, essentially the ecosystem that is to be created around this to operate, right? I think competition is already thriving in the marketplace today, across all sort of payment forms. We absolutely want to ensure we always carry the best of what we've learned, in other payment mechanisms, whether it be card, check, or cash, into whatever new avenues we want to sort of be doing. Yeah. And I think this is absolutely intrinsic as well around stable coins and in fact, what the digital euro is all about.
Okay, yeah, great. So, Karel, we've had the sort of policy outline there. We've had the industries outlined there. You have larger philosophical questions about the direction of travel. Can you just give us your thoughts?
Plenty of thoughts if I hear these two gentlemen speaking this morning, and of course if we read about this in the media all the time. First of all, we have to ask ourselves, let's say, what is the problem which we have today? What is the problem? What do we see in payments systems happening today? And why would there be a role for a central bank to be active in this domain? Of course, we think a central bank, because it's called bank, that it should be active in payments. But what is the role of a central bank, first to start with, is monetary policy. And monetary policy is just, a thing which is very topical today, guarantee stability of prices. And how does a central bank do this? Just by controlling the amount of money in circulation. 1, and 2, and 3, all those which have studied economics will know this. But basically, being active in payments is something totally different. It's a service which you provide. And if I hear Marcel Haag saying it should be a kind of complementary, I mean, the ECB could do the same as private sector providers are doing at the moment, this is confusing roles. I mean, the central bank and the ECB's mandate is very clearly monetary policy, controlling inflation, price stability only. The ECB has no other mandate. A bit, let's say, contributing to financial stability of the stability of the financial system, etc. But its main task is controlling that there is not too much inflation. And today we have a bit too much inflation, by the way. It should not be active in providing payment services. This is a task for the private sector. And that's the debate which is, I think, which this whole debate about central bank digital currency is kind of confusing. This is not a task for a central bank. A central bank is a public sector organization. It's not a private sector organization. And if we say that the ECB or a central bank is allowed to do this in competition with private sector providers, what we'll see, everybody will put his money with the central bank. For the reason which Marcel Haag mentioned, of course, because the central bank is much safer than all these private sector banks. But we forget, first, as I said, it's not a task of a central bank, but also, I mean, we will have things which will not function if a public sector organization will do it. I mean, for example, there will be liquidity problems. For sure, there will be shortage, for example, of cash in payment systems because payment systems are provided by private sector. There will be problems of competition between private sector banks and the central bank, etc. It is not a task of the central bank. We have seen this also in the context of the ECB when the ECB started Target 2 securities. Also an issue of a lot of debate. Verena knows about this.
Explain what that is, because I don't.
Target 2 securities is basically the system by which the ECB has intervened in the settlement systems for securities, meaning you sell or you buy a security. It's given from you to me. The settlement is organized by settlement systems. Also private sector organization. What has the ECB done? Because settlement was seen to be far too expensive. If you do this to me, you pay kind of a certain fee on the service, which the bank basically organized between you and me. It was seen to be too expensive because we have too many settlement systems in Europe. What did the ECB say? Let us organize a settlement system. What is the end result after, I think, 12 or 14 years of trying to have an efficient settlement system in Europe? That the settlements through the Target 2 security systems are more expensive than they were supposed to be.
And so by that thinking, coming up with an ECB-backed central currency is basically just muddling the waters.
Exactly. So because we see a problem with the cost of payments problem which we have today will not be solved by letting the ECB do it, because it's not, first of all, a task of the ECB, but it's not guaranteed at all. And I refer to Target 2 securities that will become cheaper if the ECB will be doing it. It's just a problem in the market, and we have to organize the market better. Because I think also the person from MasterCard knows very well, we have a problem of oligopolies and inefficiencies in payment system at the moment. On top of that, what is one of the problems, I think for many of you, consumers, that you don't know that payment services can be provided by operators under different regulatory regimes. I mean, it can be done by a bank, everybody knows, but we also have what we call in the EU language, the e-money directive. Marcel will certainly know about this. You can also provide payment services under e-money directive, where the capital or the reserves which you need to have are much lower than a bank needs to have. So that's already competition. We have the Payment Services Directive, discussed a lot, and a consultation is ongoing at European level to have a new Payment Services Directive 3 eventually. We have the Payment Services Directive 2, by which there can be competition between banks which hold the data about those which are doing payments to kind of non-bank payment providers. We can today also provide payments through cryptocurrencies, because there is a proposal on the table for MiCA, the Market and Crypto Assets Regulation from the EU. But today already, we can do transfers through Bitcoin systems and be paid for that. And there is also the regulation for credit card providers, which basically is the rules which apply to Visa and MasterCard. So basically, we have a problem that we have a kind of an untransparent market that's very unclear for consumers to know what is in fact the best way to do a payment. We know in certain, the classic cases were seen to be very expensive. We have seen more competition. That's certainly the useful thing over the last 10 or 15 years. We have seen newcomers. There is more competition. But I think there is still a lot of kind of market, so to say, inertia to be overcome to have a much more efficient system. Yeah. My problem is for Europe, we have too many different regulatory regimes which make this competition somewhere unequal. There is a kind of an unlevel playing field for competing in payment services in Europe. And we, as a consumer, do not know, is my transfer, which I will do today, to you safe or not? And will you get the money? Because once I use an external provider to pay you money, it basically gives you credit to this provider. But will it arrive with you? I don't know. I trust that the provider will make sure that it arrives. But will it arrive? I don't know. And that's why we need regulation. But if the regulation of that entity is so different, I mean, you do regulatory arbitrage and you see what is my easiest, cheapest way to do this transfer.
No, but if we stick to central bank digital currencies right now, then Marcel, what are you thinking? Like, why are you coming up with a digital euro when you know, we're just confusing everything here?
Look, this is a project that is done by the ECB, and it's in an investigation phase. And I think the thinking behind it is very simple. The ECB and the Euro system are issuing Euro notes and Euro coins. And what we have seen as a long-term trend, but then also very strongly accelerated in the pandemic, is an increase of a decline of the use of cash and an increase of the use of electronic payments, including card payments. That are made contactless. Now, the decline of the use of cash is happening everywhere in Europe. In some countries faster than in others, but even the countries that have traditionally been the most attached to using cash see a strong decline in the use of cash. Right. Now. The ECB is now looking at how to respond to that. And the question here is, does it make sense to provide citizens with a digital equivalent of banknotes and coins, not because they should disappear, but there should so cash should continue to exist and will continue to exist.
But I guess the question is whether we should leave it to the markets.
As a digital.
Whether we should leave it to the markets rather than necessarily have regulators and supervisors and monetary policy folk come in and do it for us.
Yeah, but why should, the question is, should there be, you can turn that question around and ask, is there a role for a public money equivalent in the digital world?
No, and I want to bring in Jason here because, I mean, MasterCard does also facilitate payments to crypto assets, cryptocurrencies, depending on which way you look at it, and also non-fungible tokens. I mean, do you feel that this should be an industry-led solution?
So yes, couple of points actually, if you don't mind, because I think it's also worth bearing in mind, just responding a little bit to Karel's comments, right? Because he covered a wide ambit of elements. I do think he is right in that we do need to sort of have better clarity around what stakeholders' roles are within sort of the crypto and the digital wallet space. You know, wholeheartedly understanding the mandates of the institutions, I think, is important as well. We absolutely, you know, do concur with that. What I get sort of troubled with is sometimes what Europeans don't really appreciate, that they do have already a highly efficient payments market, right? And it is very true, as Mr. Haag just said, you know, that the use of cash is declining, but it's still very much there. And, you know, there's a cost to sort of maintaining that. And yet again, Europe is one of the most efficient marketplaces in the world for that, right? When we talk about even card-based payments, I mean, Europe, as a result of, you know, really good European regulatory frameworks, offer consumers and businesses, merchants and retailers, and indeed banks, the lowest cost of payments in the world, right? So, you know, there is a dynamic there. Then to the point of, you know, oligarchies and duopolies, I mean, this is a highly efficient and competitive marketplace, right? And I think this is something that you know, both the private sector and indeed the institutions should be really proud about. So when we come down to sort of, you know, how do we see this, right? Coming back to, again, how do you help Joe Smith in the street sort of understand what needs to be done there? And I think, yes, you know, understanding a digital euro in terms of, you know, what is today coinage and notes. How do I sort of utilize that in a digital environment? I think there's a need for CBDCs, absolutely, right? These can coincide exactly with existing, you know, cryptocurrencies, right? What we like about all of this is, of course, the technology that underpins this, which is the blockchain, right? And certainly we feel very strongly around, you know, what you know, stable coins will do, not only for, you know, businesses, but consumers, because again, it gets down to that point. And exactly as you just said, right? So today, you know, we offer, you know, the ability to, you know, use your connection to a savings account, credit account, stored value account to sort of take fiat and transfer that into crypto coin or cryptocurrency. And equally, you know, we've just also announced an interesting sort of move towards with Coinbase, actually allowing sort of consumers to, you know, engage with the Coinbase NFT marketplace to move into asset referenced tokens as well, right? And I think this is again an area where we need a little bit more clarity. You know, we understand sort of PSD2 does a fantastic job of really sort of ensuring sort of clarity around consumer protection around all sort of payments, including, you know, crypto payments. But, you know, we also need to make sure that, again, I think Karel makes a good point, that the institutions are really focused on what they're supposed to do, which is to really ensure that there is an efficient market, the marketplace is operating, and equally that, you know, legislation isn't necessarily sort of contradicting each other. And so we are a little bit concerned about, you know, as the rise of asset, you know, reference tokens sort of will grow, what is, you know, the protection element around payments on that? Because that's not necessarily very clear in PSD2 today. And I will tell you, this is where consumers are moving. They like this ability to sort of, you know, one, be speculative at an angle, right? But ultimately, they also want to sort of connect in to sort of, you know, fiat. And we're one of those networks that allows them to do it, right? And again, they have very simple, easy access. And ultimately, where we want to go with this is whatever I do in my virtual avatar environments, you know, around my financial well-being, I need to sort of still transact in the real world, right? So whether it's making an online payment, merchants still like fiat, they really want to have money in their bank account, down to sort of walking into sort of, you know, a store to buy clothes for your kids. You can still utilize the existing framework, and that contactless network that the previous speakers referenced. This is key. This is exactly what we want, you know, consumers and indeed the whole ecosystem to be utilizing, building on what we've already made what the consumer is used to today in a virtual or in a physical environment.
I want to just ask you one question on this before we move on to digital wallets, and I'll come to you, Karel, about that in a second. But when we're talking about, crypto assets, and for those that don't know, whenever Jason talks about PSD2, he's talking about the Payment Services Directive, which will be reviewed soon. But there's one thing that I find kind of curious, and I mean, maybe to me it seems like they clash against each other, but maybe you can explain it for us better. But when you help provide for people to transfer their money into crypto assets or these non-fungible tokens like a GIF that of an ape, which is supposed to be unique to the online world. I mean, are you fueling a future world of payments, or are you fueling a desire to be speculative and gamble?
All right, so that is a little bit of a leading question. Of course, it's obviously to fuel a world where consumers have choice and really want to execute payments, right? And again, it's a two-sided market. You've got a buyer, so the consumer or a business, and you've got a seller, usually a marketplace, a retailer or something, right? And what they want to be able to do is transact, right? Payment is sort of acknowledgement of those barters, those exchange of goods or services, right? And exactly like you say, a gorilla as an NFT, who knew that our children would be buying, 20, 25 years ago, avatars and spending like hundreds and hundreds of euros a month on sort of digital services. Yeah. We couldn't have foreseen that, right? So we weren't necessarily driving, kids to sort of play online games. What we were enabling them to do is sort of engage within sort of the financial services environment of connecting payments, and doing so either by, a virtual card element, taking a voucher and loading it up onto a digital wallet. And we see no difference as we sort of expand again, as I said, to source of funds, which would be, an asset-based or asset reference token, which in a way kind of is almost like a mutual fund type of environment. I think that's an easier way to explain it to people on the street, or to sort of a fiat-based stablecoin.
Yeah, I'm going to move on to digital wallets now. I can imagine you want to say stuff to that, but please don't, because we do need to move on. But what I do want to get onto in digital wallets, and people who might not be too familiar with what a digital wallet is, I mean, just very simply, if we have a cryptocurrency or a crypto asset, we need to put that in something on our phone, for example, in order to store it hopefully safely, just like a bank mobile app holds your money. But there are certain other benefits that could come from a digital wallet. For example, banks could use it to check certain information on your ID to make sure that if you want to open up a bank account, you might be able to use the information that you store in your digital wallet in order to do so. This is the next battleground within financial services and fintech. And Karel, recently you had a panel debate where Facebook, or now Meta, they had someone from their digital wallet called Novi there to speak to you about it. And I'm just wondering, what is your take on this new world that we're moving into?
As I said a moment ago, it's a fantastic development, and it's good that we have more competition, because we are speaking just about this. We need more competition to make payments more efficient, and that's what we've seen for the last 15 years. The problem, as I see it, first of all, is that what Facebook tried to do, but they have abandoned it a week ago or 2 weeks ago. They have said, look, this is not our core service. This is not something which we will continue to do, because it seems to be probably too complex.
This is DM you're talking about.
Yeah, exactly.
Just to explain that very quickly, Facebook tried to launch a virtual currency and a payment service called DM back in 2019, but about 3 weeks ago or something, basically the CEO said that this wasn't going to work anymore, and it's being sold for 200 million after some serious backlash. So,
because apparently they realized it's much more complex to do payment services, to have it organized, to have a regulatory approval for it, let's say, than they thought it was. And they thought, let's say, with our franchise, we can do it all over the world. We'll earn a lot of money, and in the end, that prove, let's say, that it won't be that easy. But for me, the biggest problem with digital currency, digital assets, is that there's so much confusion of words. What is this all about? And I think cryptocurrency already as a term on itself is wrong, because it's more a crypto asset than a currency. The currency as we know it is the currency with which we pay, let's say, which we can pay everywhere, and which is accepted as a legal tender everywhere. If we get our euro here. But if we have a crypto asset and we pay with a crypto asset here in a shop, we will not be paying at a one-to-one exactly. Let's say, if we pay here for a service and we pay €2, we'll pay exactly €2. If we will pay a similar amount, let's say we'll pay with a crypto thing, we will say, look, we will pay a cost for having our asset transferred to this euro, and the intermediary which offers that service will have to be paid for that. So there will always be a difference, and it will never be exactly the same as the one-to-one which you have for the euro.
But on wallets?
And yes, exactly on a wallet.
Yeah.
Of course, we can pay also with our iPhone or with another phone. Let's say, just say, look, like the service which is Apple Pay is now providing, but it's not an Apple service. This is a service which is Apple is facilitating through a service which the bank, Apple has concluded with bank. It's basically simply a payment which we do through our account, which is facilitated by the technology service by Apple or by another provider. But in that case, this is not, I think I wouldn't call this, well, we could call it a digital payment, but this is not a digital payment as we're speaking of in other circumstances. This is a simple transfer facilitated by a phone, like it was facilitated by a card before, or like it was facilitated by simple cash before.
That's an interesting idea. So rather than actually, I mean, are we kind of masking the reality by calling it a digital wallet in some way when it's actually just a facilitator?
And that is one of the problems. Let's say, if you speak about digital payments overall, just ask the person in question, give me a definition about digital payments. Because even before this debate started, when I heard it said digital payments, but we have digital payments since 20 years or since 25 years. But then if you have the more narrow definition of digital payments, it's, or say, for example, the central bank digital currency, is you have a direct account with the central bank, with the issuer, which is, by the way, as I said, not the task of the central bank. That's a task the bank controls, central bank controls price stability, doesn't provide payment services, which is for the private system.
Yeah.
Of course, there were central banks in the past which are providing that service as well, but our definition within the context of the ECB, but also in the United States, is that they simply look at price stability.
Yeah, Jason, you might not necessarily. I'm going to come to you. Yeah, let me just ask you the question, and of course you can frame it within that. But I mean, digital wallets themselves, as a facilitator, as a mediator, as a middleman, as such. I mean, that's also going to be a big competition to MasterCard, I can imagine. No, I mean, do you worry that this is the future in which we're moving in?
So. No, I'm not worried about this because I think there's plenty of competition and plenty of options, right? So let me go back to a good question, which is what Karel puts on the table, like what is the definition of a digital wallet, right? Where I disagree with him is that, an asset-based or a cryptocurrency couldn't be foreseen, as housed within a larger digital wallet. And why do I say that? Because it comes back to source of funds, right? So if I'm a business, if I'm a consumer, I have multiple sort of options available to me today. Money I have, whether it be cash or money I put into a savings or a checking account. A loan can be any type of thing, from a credit card loan which is unsecured, to a secured loan, to an installment type aspect, to also then, holding sort of, cryptocurrency, right? Which does have value, and which, again, around the stablecoin elements, we do believe, is a good thing, because ultimately you still got to want to come back to, on-ramping, so how do I use fiat to buy crypto? And then off-ramping, how do I then sort of find the value of that and bring that into sort of real day use? So that digital wallet for us is really how that consumer or that business is necessarily going to engage. And of course, that source of funds will run either on an instant payments type element. It could run on a card rail. It could run on open banking elements. That's the piping in the back, which we as an ecosystem need to worry about and get right. And in that regard, Karel, I'm afraid I disagree with you. There is plenty of competition. And we see that in the fintech space. It's really exciting, the frameworks we see in Europe, which are driving, challenging incumbent institutions like banks, but equally helping those banks sort of, right size and right fit themselves for the future in which they need to engage with their consumers and their businesses.
I want to come to you, Marcel, but I guess, Karel, if you could briefly just address what you were saying. I mean, clearly there's a disagreement between you two.
I would say to Jason that one of the problems I see, you go back to, for example, go to Northern Africa, go to Latin America, you see that, I mean, of course, we have a much more developed society in Europe, let's say, than they have there. But if you're there, and you want to do a remittance, you have a big problem. Just because the market is less developed, there are much less providers available in the market. So why did, for example, in these countries, Bitcoin emerge? Because there was no other way to make a payment with a reasonable cost. If we know, and the Commission mentioned this in its consultation from last year, Marcel, if you see that remittances in many of developing countries is about 10% of GDP, and we know that the cost of a remittance is easily 7 to 8%, you know that 7 or 8% is going to the providers, which is basically far too high. And that's why I think this element, which is also in the Commission consultation, is so important to keep in mind. Payment services, and that's why also central banks have jumped upon the central bank digital currency. They realized if we don't react on this, there is a huge inefficiency in the market. We need to tackle this. And that's why central banks have said, look, we will try to do this ourselves because apparently the private sector cannot solve it. And you see this then above all in these markets where there is hardly kind of facilities available or there is hardly trust to say, look, I cannot trust the banking system to make a transfer. I prefer, let's say, to go to a crypto provider.
Marcel, I want to move to you, but again, sticking a little bit with the sort of digital wallet side of things, because the Commission did last summer propose a digital wallet within this electronic identification proposal. But what was interesting was that it came out of the Department for Connectivity, so tech, and of course the financial department had something to do with it, but it seems to me that we might have missed the trick a little bit on making sure that this digital wallet came with specific financial safeguards.
Look, this is still a proposal, and as you said, the digital identity framework is a much broader initiative, and the wallet is only one of the possible is only one of the components, and within that wallet, which also has much broader functions, the possibility of using it also for financial services is then one possible application, and we will have to see, and that is also part of the PSD review, to which extent now that framework would have to be complemented by additional provisions, but the initiative of DG Connect and of a digital identity framework is a much broader one. So when it comes to wallets, our regulatory framework is still incomplete. You're aware that MiCA foresees that digital wallet providers for crypto assets are covered by our MiCA rules, looking at a more comprehensive way of regulating wallets will be for the PSD2 review.
So a more comprehensive piece of legislation on digital wallets will come in the review of the PSD2. That's what you're saying?
We're looking into this.
Okay, because my last question on the digital wallet is to you on this before I then move on to the European Payments Initiative. And for those that don't know, MiCA is a piece of legislation that's trying to introduce transparency and consumer safeguards for the markets in crypto assets. So just people know for that. But when it comes to the digital wallet, if we have Meta's Novi already running pilot projects in the US and in some areas in Central America, and we're talking about a review which, from what I understand, will either come at the end of this year or early next year. Are we not letting the industry basically just decide how this should look? Marcel.
Look, I'm not so sure. That's the way to look at regulation. The European legislator establishes the rules for the European Union, and then it is for private operators to decide whether they want to be present on the market and comply, or they pull out.
Okay.
Now, I mean, MiCA has been discussed and developed in parallel with DM.
Yeah.
And
yeah, and DM died. Yeah.
but not because of MiCA. Not because of MiCA.
No. Fair play. Well, I think depending on who you ask, it's another thing.
But I think we're living in a world in which is so fast evolving that we will have to accept as a matter of fact that regulation will be developed in parallel with technological developments.
Let's just hope that they're fast enough, but that's a whole other different subject in itself. But yeah, for sure. We got 4 minutes, and I want to dive into a massive topic, which is the European Payments Initiative, which obviously we're going to have to take it a little bit quickly on this one. For those that don't know, the EPI is an attempt of European banks to set up a payment service that would, forgive me for saying, rival MasterCard and the likes of Visa, and have a sort of European giant in some way. The thing is, there was all this talk about the fact that they were going to make a decision, these European banks, in October, then it became November, then it was the end of December, then it was late January, early February, and it looks like we're moving into mid-February, and I still haven't heard anything. The thing is, the banks won't tell me anything, the EPI won't tell me anything, and the Commission's been pretty quiet on it too. So, Marcel Haag, can you please tell us what the hell is going on?
Well, look, I mean, this is a private sector initiative, which brings together a number of European banks. The Commission has stated on several occasions that it is supportive, as a matter of principle, to such an initiative, and that is essentially, and then it's for the private sector to decide what they want to do. We see certain benefits in having such an initiative, because it would increase competition, and that would be for the benefit of consumers and retailers.
Yeah.
So.
Yeah, it'll come short.
I'm not going too far.
No. Fair enough. I know that's the holding line. I've heard it before from the Commission.
Okay.
So, fair enough. But I mean, Jason, you must be loving this. I mean, watching the EPI sort of run around in circles and chase its own tail. No.
Well, first of all, let's sort of step back, because yes, it is a private sector element, i.e., it's a number of banks, and by the way, those banks are my customers, right? So, and those are the customers we've been serving in Europe for the last 50 years, right? So, it's not like we're sort of, there's a new competitor in the town, we're going to fight. These are our customers. Obviously, we're going to work and partner with them, and indeed, MasterCard is absolutely doing that. But, it is also a response by the private sector, because they're recognizing that it is Europe's legitimate desire, to have payment sovereignty, right? And payment sovereignty is not necessarily a question for say MasterCard or other players. It's an inalienable right of governments and their citizens, right? So I do think that this is a good response. Obviously, you're not going to get wide agreement from everyone all the time. This is Europe, and of course, you are allowed to disagree, even in the private sector. Yeah. And I think as we sort of look at EPI, it's going to be a new competitive marketplace. It's sort of or a market competitor. It sort of brings up what happens already today at a national level in what we refer to as a domestic scheme. We're as an organization are already working with those customers, with EPI directly, to make sure that we're also sort of fostering a partnership model, because frankly, this is a highly competitive marketplace. I still agree with my comments that it is the most efficient in the world. And as a fellow African, I can tell you, Karel, I don't know too many Africans who sort of, deal within the world of Bitcoin. But what I do know is that in Europe, consumers have some of the most fantastic things that they get to work with. And at the heart of what EPI is trying to do is not only just bring in the traditional card-based environment, but also work at delivering sort of on the institution's belief of really delivering on real-time payments. And I think that's sort of what all of us are sort of striving for. Ultimately, this is what the banks who represent the EPI are trying to do, and they partner with us in that same element. And just to close off on one element on EPI.
But quickly,
right?
please, Jason, because we've run out of time.
Yeah, because I think the key thing is banks are also responsible for anti-money laundering and knowing their customers, right? So around credentials, these banks, whether they are partners of MasterCard or EPI, they're part of that digital identity, right? They're part of, my bank is part of verifying who I am online, how I engage with those sorts of funds. So let's not sort of diminish what banks have had to do in order to comply. So so thanks, Pia.
Yeah, and Karel, I do want to give you a chance here, but please do keep it short. I mean, what, EPI opportunity or a house on fire?
I would say rather the last. We see it's in the sense of what I said before. The ECB sees there is a problem, pushes the banks to please solve it. And formally, it's not the ECB is not involved. The ECB has been pushing for this for a long time. There are some people in this room who know this very well. They see there is a problem in payment markets, so they say, please, banks, solve it. But banks are only one part of the payments market. There are so many others. So that's why probably you and me don't know more about what's going on, because they see probably that they don't agree amongst them. And they also see that probably if they agree amongst each other, that probably the initiative will not be sufficiently competitive to what is happening outside the market. Let's say by other payment providers which are not regulated as banks. Yeah. And that's one of the problems which we have. But I agree with Jason. Let's say we have a competitive market, but what I would say, we need more transparency as a consumer about payments, about the cost we're charged. And we see in Europe, we have a huge legacy still of the cross-border elements. Say we still don't have a fully integrated market. We see it in the banking sector on a day-to-day basis, but also in so many other elements. And as soon as there's a foreign exchange element involved, we again, as a consumer, are badly off because we hardly know what's going on. We know it's as soon as we cross the border, we go to a country with another currency, we're asked to pay. Do you want to pay, for example, and MasterCard asked this, or the system for MasterCard, you want to pay in local currency or you want to pay in your own currency? And everybody thinks, in my own currency it will be cheaper. No, it's just the opposite. You have to pay in the currency of the market where you are. Yeah. But kind of the normal reaction of a person say, of course I want to pay in euro if I'm based in the Eurozone. But you're in Switzerland, you pay better in Swiss francs. But then you pay a kind of a foreign exchange cost to have it paid in Swiss currency. And that consumers, again, hardly know of what exactly will be the cost for the foreign exchange. No, and on top of that, the cost for the service. And these things, let's say, should be much more transparent. There should be much more competition in these markets that consumers understand. Yeah. And I think that's why also Marcel knows, let's say, that they don't want to bring PSD under e-money, but there should be a simplification of regulatory systems for payment providers in the EU.
And thank you for that. We're going to wrap it up now. We did have a poll. I just very want to quickly show what the results were, if we can get that up. Oh, we don't have it on the screen, I'm told, in my earpiece. So, well, you know, I don't have the results in front of me either, so we're going to have to find out what the results of that were later, and I'm sorry for not being able to provide that to you. But in any case, I thank you all very much for a very telling and very interactive discussion, and again, remembering that the consumer is basically what we're all trying to serve at the end of the day. The next session, in about 5 minutes, we'll have our own Pauline de Saint-Rémy, who will have the French Finance Minister Bruno Le Maire for a Playbook Paris interview. Please remain seated here in Paris, and then for those watching online, we'll be back very shortly. The interview will be in French. So if you can't understand French, good luck. No, I'm kidding. No, there is a translation available online. You just got to plug your headphones into it for those people who are in the room here. But online, you can get the translation there. We'll be back very shortly. Thank you very much to our panels. Please give them a round warm of applause. Thank you so much. And we'll be back soon. Thank you. Thanks.